December 2024, a $1.2 trillion shockwave tears through Wall Street. China's retaliation isn't what anyone expected. Beat Semiconductor gamble, the one decision that could collapse an entire industry. Pause, and hidden beneath the chaos, silver markets are screaming a warning most will ignore. Beat. 3 crises, converging at the worst possible moment. Pause. What happens in the next 72 hours could rewrite your financial future forever. Welcome to Currency Archive, where we help serious investors like yourself navigate the storms Wall Street won't warn you about. If this is your first time here, I'd be honored if you'd subscribe and join our community of strategic thinkers. And please, drop a comment below telling us where you're watching from today, whether it's Texas, Toronto, or anywhere in between. We want to hear from you. Now, let's expose what's really happening. December 2024 marked a turning point that few Americans saw coming. President Trump stood before the nation, declaring victory in his trade war against China. The tariffs were working. The economy was thriving. America was winning, or so he claimed. But beneath the surface, a very different story was unfolding, one that would expose the greatest economic miscalculation of the decade. The report card for 2025 painted a picture of success, an A-plus economy, strong growth, manufacturing returning home. He believed the tariff strategy had transformed America into an export powerhouse. But the data told a completely different story. The harsh reality was this: if not for the artificial intelligence bubble and massive tech investments, the United States would already be in recession. The tariff war wasn't building American industry, it was demolishing it. Economic growth in 2025 concentrated in just 4 sectors: healthcare, real estate, government, and technology. These industries kept the numbers looking good on paper, but they weren't the industries America needed to become an export-based economy. Construction was collapsing. Manufacturing was dying. The only exports still moving were AI chips. And even that advantage was slipping away. The fundamental problem was simple, yet devastating. When you raise tariffs on key inputs and raw materials, you cannot possibly manufacture affordable goods anymore. American suppliers had no choice but to raise their prices. They added their own profit margins on top of the tariff costs. The final products became too expensive to compete globally. Entire strategy rested on a simple premise: weaponize the massive U.S. consumer market, force China to its knees, and watch its factories relocated to American soil. U.S. consumers would absorb some pain. Yes, but China's economy would suffer far more. Trading partners and allies would shift their production facilities to the United States. America would finally decouple from Chinese manufacturing. The plan seemed logical, even brilliant. But January 2025 data shattered this illusion completely. China's trade surplus for 2025 hit an absolutely staggering record: $1.2 trillion. It wasn't just a good year for Chinese exports, it was a blockbuster year. Overall, Chinese exports surged by 6.6% in December alone. But here's where the story gets truly shocking. Exports to the United States dropped by 30% during the same period. Tariffs were working, just not the way he intended. China was indeed decoupling from America, but they were thriving while doing it. Chinese exports to Europe increased dramatically. Sales to Asia climbed higher, but the growth in Africa was absolutely insane. 26%. Beijing understood something Washington refused to acknowledge. The future wasn't in America, it was everywhere else. China demonstrated to the world that their export economy could not only survive without the United States, it could actually thrive. Every additional country that bought Chinese goods made future sanctions more impossible. The world needed Chinese manufacturing to keep costs down. China exported deflation to nations desperate for affordable products. And the trend heading into 2026 showed no signs of slowing. There's a reason why leaders from France and Canada were suddenly running to Beijing. Prime Minister Carney understood what refused to see. The potential of Chinese markets was enormous and growing. These nations needed Chinese exports, rare earth minerals, advanced technology. But more importantly, they needed access to Chinese consumers. China's e-commerce market had grown to dwarf the United States. 40% of global online sales centered around Chinese platforms. Last year alone, China's e-commerce reached $3.4 trillion, nearly triple the size of American online markets. Western companies still desperately wanted to sell into China, not just barrels of oil or commercial aircraft, but consumer goods, luxury items, everyday products. Chinese demand for online shopping signaled massive import potential. Meanwhile, the United States was importing less from everyone. The leverage had completely swung to Beijing. This revelation was driving Trump absolutely mad. He went all out defending his tariff war. His latest statements became increasingly bizarre and desperate. He declared that tariffs were working perfectly. Anyone who disagreed was labeled pro-China. He compared his critics to those who supported failed policies in 1929. The evidence shows overwhelmingly that tariffs are not paid by American consumers, he insisted. They're paid by foreign nations and middlemen. Countries get involved. They pay them because otherwise they won't have companies. Once again, the so-called experts were wrong, and Trump was right, at least according to Trump himself. But why was the president hopping mad if everything was going so well? The answer was painfully obvious. He couldn't reverse course on the tariff war without everyone laughing at him. Political pride had trapped him in a failing strategy. But the longer this continued, the stronger China's advantage grew, and the weaker America's position became. The great tariff experiment was failing, and the world was watching. While America celebrated its tariff victories, China was quietly executing a strategy decades in the making. A strategy so brilliant, so calculated, that most Western economists completely missed it. Beijing wasn't just surviving the trade war. They were using it as rocket fuel for global domination. China's economic philosophy had always been different from the West. Invest more, consume less, build today, profit tomorrow. It seemed counterintuitive to American minds obsessed with quarterly earnings and immediate gratification, but this patient approach was about to pay off in ways nobody anticipated. Chinese companies were buying up global supply chains like chess pieces on a board, building factories in countries where production costs remained affordable, creating an empire that couldn't be sanctioned, couldn't be stopped, couldn't be unwound. Here's what surprised most people. Labor costs in China were no longer cheap. The days of dirt-cheap Chinese manufacturing had ended years ago. Wages had risen, living standards improved, workers demanded more. So why were Chinese exports still crushing everyone? Because Beijing had already moved to the next level. They weren't competing on cheap labor anymore. They were competing on infrastructure, efficiency, and scale that no one could match. The trade war wasn't hurting China's global production control. It was actually helping them tighten their grip even further. China's trade surplus was always destined to grow. The pandemic exposed how completely dependent the world had become on Chinese factories. Masks, ventilators, electronics, furniture. Everything flowed from China. Since 2020, Chinese exports had been on an absolute tear. But the 2025 tariff war changed the game entirely. Not only did China export more goods to the world, they bought far less from the United States. Their trade surplus exploded like never before. Analysts were now predicting it could hit 1.4 trillion. Maybe even 1.5 trillion this year. The numbers were staggering. Chinese companies, both private and state-owned, were being forced up the value chain at breakneck speed. Invest or die. Innovate or disappear. There was no middle ground, no safe harbor. Competition was brutal and relentless. But here's the critical advantage Beijing held. So many exporters were state-owned enterprises, the government could direct these massive earnings towards strategic investments. Investments that would pay off not in quarters, but in decades. The trade war itself had become something truly bizarre to witness. Trump was essentially taxing American consumers to generate government revenue, hammering down on U.S. manufacturing with his own policies, antagonizing literally every country on planet Earth, including friendly nations, allies, even tiny island territories. But the biggest winner in this chaos? China. It made absolutely no sense. Yet here we were. Chinese companies, flush with record profits, had enormous amounts of capital to deploy globally. And where was Beijing directing these investments? Basic materials, metals, minerals, the fundamental building blocks of modern civilization. China was still consolidating global supply chains even in 2025, pouring money into mines, refineries, processing facilities, from lithium mines in South America to massive gold projects in Africa. The resources that powered the modern economy were turning Chinese. Energy investments were equally aggressive. Power plants across Asia, oil refineries in the Middle East, solar installations in Africa. The scale was breathtaking. Big investments spread across continents like a web. Africa and Asia saw the heaviest activity. One could already see China's future strategy taking shape. As certain industries got priced out of mainland China, they would simply relocate to these friendly jurisdictions. Countries where China had already built massive infrastructure, created ecosystems, established relationships. The footprint had been growing for years, for decades, and now it was about to become unshakable. Meanwhile, the United States tripped over itself once again. This time, the chip war reached levels of absurdity that seemed almost intentional. Trump decided to interfere directly in private sector operations, making things less efficient, less effective, more chaotic. The administration announced a 25% export tariff on Nvidia chip sales to China. Not an import tariff, an export tariff. This meant Nvidia had to pay 25% of their Chinese sales revenue directly to the Trump administration. For every $10 earned, $2.50 went straight to the government. And where was that confiscated money going? A significant portion would fund expanding the US military. Think about how bizarre this situation had become. Nvidia and other chip companies sold to China for a critical reason. They needed that revenue for research and development, to innovate, to create more advanced chip lines like the Blackwell and Rubin series, cutting-edge technology that kept America ahead. But now, revenue was being transferred to Trump's team instead. Wasn't this completely self-defeating? Meanwhile, China was doubling down on their own semiconductor investments. Chinese companies got to keep all their revenue. Plus, Beijing was throwing massive subsidies on top. The contrast couldn't be more stark. America was handicapping its own champions. While China was supercharging theirs, the chip war was about to get far more interesting and far more dangerous for American dominance. The United States had a dream: bring Taiwan's legendary chip factories back to American soil, become self-sufficient in semiconductor production, end dependence on Asia forever. Commerce Secretary Howard Lutnick stood before cameras, eyes gleaming with confidence, announcing commitments that sounded almost too good to be true. And as it turned out, they were. There's 2 commitments from Taiwan, Lutnick declared proudly. $250 billion that comes directly from companies, and then there's $250 billion supplied by the government to help their smaller and medium-sized companies bring that whole supply chain to America. $500 billion total. A staggering amount that would supposedly transform American semiconductor independence. Well, we're going to bring it all over so we become self-sufficient in the capacity of building semiconductors, he continued. This is exactly what Donald Trump said he was going to do. And he is doing it today. The plan sounded brilliant on paper. Nvidia would have a dedicated pipeline of chips manufactured domestically. No more shipping from Asia. No more geopolitical risk. American innovation. American production. American dominance. But there was one catastrophic problem nobody wanted to discuss: demand. The plan completely ignored the fundamental reality of global semiconductor markets. Sooner or later, domestic US chip sales would inevitably stall. The American market, as massive as it was, had limits. Nvidia and other companies would have to look elsewhere to sell their products. And whether Trump liked it or not, that somewhere else was China. China represented half of the entire global semiconductor market. 50% of all chip sales worldwide. You couldn't simply ignore half your customer base and expect to thrive, but the problems ran even deeper than market access. Chips manufactured in the United States were already going to cost significantly more. Higher labor costs, stricter regulations, expensive infrastructure. Then Trump's export tariff came along, extracting 25% of Chinese sales revenue. This wasn't just hampering profits. It was actively stalling technological progress. Every dollar taken from Nvidia's research budget was a dollar that couldn't fund the next breakthrough, the next generation of chips, the innovations that kept America ahead. Meanwhile, Chinese competitors like Huawei were closing the innovation gap faster than anyone anticipated. But perhaps the tariff wouldn't even matter. Reports emerged from Beijing that sent shockwaves through Silicon Valley. Chinese customs officials were being instructed not to allow Nvidia chips into the country. The situation remained in limbo. Did China actually want to buy American chips anymore, or had they decided to go their own way completely? Trump was complicating everything at the worst possible moment. If someone had asked for honest advice, the answer would be clear. Allow unrestricted access to China right now, before it's too late. Drop the export tariff immediately. Let Chinese revenue flow unimpeded into companies like Nvidia. Because if America didn't, China would simply speed ahead on their own. They would close the technology gap faster than anyone thought possible. And when that happened, there would be no going back. The evidence was already mounting. Since 2020, China had been hot on America's heels in semiconductor technology. Chinese hardware was just a couple of steps behind US chips in raw performance. But that didn't mean Chinese AI models were underpowered or inferior. Cost efficiency was still a massive factor in real-world applications. Huawei's Ascend chips might be 3 times weaker than Nvidia's top-tier lineup, but they also cost 3 times less, maybe even more. Chinese companies understood the game they were playing. Focus on quantity until quality catches up. Play the numbers game, deploy more chips at lower costs. Eventually, the performance gap would close, and when it did, America's advantage would evaporate overnight. The semiconductor war had become a suicide mission. America was shooting itself in the foot while declaring victory, restricting its own companies from selling to their largest market, extracting revenue that should fund innovation, forcing allies to choose sides in a conflict nobody wanted, all while China patiently built its domestic capabilities, brick by brick, chip by chip, breakthrough by breakthrough. Taiwan watched this chaos unfold with growing concern. Their chip factories were the crown jewels of global technology. TSMC alone was more strategically important than most countries' entire economies. Now they were being asked to move production to a country actively sabotaging its own tech sector. The irony was almost poetic. Silicon Valley executives held private meetings, discussing options nobody wanted to say out loud. What if Trump's policies made it impossible to compete? What if Chinese chips became good enough? What if the tariffs destroyed American semiconductor leadership instead of protecting it? These weren't hypothetical questions anymore. They were becoming terrifyingly real possibilities. The chip war was supposed to secure American dominance for decades. Instead, it was accelerating American decline, and the clock was ticking faster than anyone realized. But while Washington fought over semiconductors, another crisis was erupting, one involving a metal most people barely thought about, a metal that would expose just how desperate both superpowers had become: silver. Something unprecedented was happening in silver markets, something that made even seasoned traders question their sanity. Prices were swinging 5 to 10%, not over weeks or months, but in mere days, sometimes hours. Silver was behaving like Bitcoin, like a volatile tech stock, and there was a very specific reason why. China and the United States were locked in a silent war for global silver supply. Both nations desperately needed the metal for the future of technology and industry, and time was running out. The evidence was impossible to ignore. Silver prices in Shanghai were $13 higher per ounce than the rest of the world. At its peak, buyers in China had to pay a record $15 premium. This wasn't just unusual, it was absolutely insane. Every silver investor understood physical premiums existed. Dealers charged extra for coins and bars over spot price, but this was different. This was pure market panic. To actually buy physical silver in China, buyers were easily paying $120 per ounce, maybe more. Chinese investors and industrial companies were rushing to secure silver today, because tomorrow was absolutely not guaranteed. The world was accelerating toward renewable energy and electric vehicles, technologies that consumed silver at unprecedented rates, and demand was about to explode even further. China manufactured more solar panels than any country on Earth. Their companies were freaking out about future supply. The need to secure silver was sending prices to the moon because there were virtually no ways to substitute it in critical applications. Just 4 years ago, silver represented only 3% of total costs in manufacturing a solar panel. Even aluminum accounted for more in the production process. But everything had changed. Today, silver accounted for a full quarter of total solar panel costs, 25%. Manufacturers found themselves in an impossible bind. They couldn't simply swap silver for copper and call it a day. There were serious durability issues, lifespan problems, efficiency concerns. The technology to substitute silver effectively was still many years away. So companies had only one option: lock in silver prices immediately, secure supply at any cost, buy more, hoard more, stockpile more, and this desperate buying caused premiums to fly even higher in China. A flood of silver began moving from west to east. Traders shipped every ounce they could get their hands on to Chinese buyers, because a $15 margin on a $90 base price was absolutely insane. It represented an enormous arbitrage opportunity. No matter how you transported the silver, by ship, by plane, by submarine, or some imaginary teleportation device, you were guaranteed to make money. The arbitrage was too massive to ignore. So silver flowed east, while Western inventories drained. But the biggest admission that a silver war was truly happening came from Trump himself. In a shocking reversal, the administration held back on tariffs targeting critical minerals, including silver. The original plan called for imposing 20 to 30% tariffs on silver imports. But Washington realized something crucial. They absolutely could not do that. Even without tariffs, imports of silver to the United States were flying upward. Major buying had been happening throughout 2025. American companies were stockpiling just like the Chinese. If Trump imposed a tariff on silver, prices would soar domestically. Importers would still have to buy the metal. They had no choice. Companies like Tesla desperately needed silver for batteries and solar technology. The biggest losers would be American investors, stackers, everyday consumers. The entire renewable energy sector would be crushed overnight. Jobs would disappear. Projects would be canceled. The green transition would stall. Trump had no choice but to back down. Take a breather on his tariff war, at least for critical minerals. But this retreat ironically reinforced silver demand from the United States even more. Economic policy had become so volatile that nobody had any idea what would happen next week. For all anyone knew, complete chaos could erupt tomorrow. So investors and importers wanted silver, needed silver, had to have silver. The buying wasn't going to stop. The volatility was only going to intensify. Anyone participating in silver markets needed to mentally prepare themselves. Fortify your mind. Fortify your heart. Prepare for wild swings of 5% daily, maybe more. Everyone was unsure about the future. Even the experts had no clear answers. However, one thing remained absolutely certain. The US-China economic war was not going to stop. If anything, it was probably going to get more intense, more chaotic, more dangerous. The tariff experiment had failed to achieve its goals. China's economy was thriving despite decoupling. The chip war was backfiring spectacularly, and now silver markets were exposing just how desperate both nations had become. The great decoupling wasn't creating American strength. It was revealing American weakness. Trump's tariff report card showed an A-plus economy on paper, but underneath, the foundations were cracking. Industries were collapsing, allies were fleeing, competitors were surging ahead, and the bill for this grand experiment was coming due. The question wasn't whether America could win this trade war anymore. The question was how much damage would be done before someone finally admitted the truth. That weaponizing tariffs against the world's factory was never going to work. That economic wars have no winners, only losers, and that the cost of pride might be the future itself. The Silver Stampede was just the beginning, a warning sign of shortages to come, of supply chains breaking, of markets fragmenting, of chaos spreading. The world was watching, and the world was preparing for what comes next.